What's going on, guys? Welcome back to another episode of Money Moves. We've got the S&P 500. Just don't stop. New all-time highs, record close today. We'll unpack that. Job openings jumped a little bit. We got Bitcoin in extreme fear. The whole crypto market is bleeding right now. We got some news on the Clarity Act and some interesting things to unpack regarding crypto. Foreclosures are at a 6-year high, and $930 billion in commercial real estate debt is about to come due. This is a wild world of investing we are in right now, and I got to say, it's a whole hell of a lot of fun. So hope you guys are having just as much fun as we are. Big shout out to Mark Byrne, who got to connect with from the show this week regarding the fund, and a handful of other investors. Mr. Paul Shack. I know Mr. Breedwell was connecting with him as well. We got a lot of great people that we love in this Millionaire Mindcast community. So thank you guys so much. If you have not reached out and said what up to us, shoot us a text, 844-447-1555. We've got a packed show today. We are going to unpack it all. Coming right up. All right, so where do we even want to start? I mean, I got a list today.
I'm ready.
I got a list today. So maybe why don't we flip this on its head a little bit? Why don't we just jump into some of the real estate real quick? So, because we know we got some exciting stuff to talk about. Real estate hasn't been very exciting compared to your world.
Not for the past 2 years.
It's been slow and honestly just very stagnant. A lot of people have been sitting on their hands, hoping they're going to figure it out, waiting for interest rates to come down,
Come on, July.
extend and pretend until 2025, right? And all of those things kind of just out the window. We've got home foreclosure filings rose 26% year over year in Q1 of this year, roughly 119,000 filings, the highest in 6 years. We kind of knew this was going to come at some point based on the absolute insanity that ensued after COVID. And we're starting to see that. I think it's a function of many different things, partially, of course, well, mainly because of interest rates.
Mhm.
You've got affordability at all-time lows. You've got wage growth very stagnant, and not necessarily keeping up with what we've seen in the values, the insurance, interest rates, and just how that all impacts, the economic model of home ownership. And I mean, as much as we're seeing the stock market and, so many other things hitting all-time highs right now, we do still have a lot of people that are, we got credit card debt at all-time highs. We got auto loan delinquencies. We've got some fractures in the average person's, call it financial status or situation right now. And obviously, I think that's a big, driver in why we've seen such stagnation in the housing market. We do have single family building permits, hanging on a little bit, but same thing there. You've got construction costs, you've got insurance costs, you've got so much risk that goes into building homes in addition to the red tape, the holding costs, the overhead to get these things entitled. And then, there's just so much that goes into this stuff, right? And it's been challenging for a lot of builders. So we've got building permits weakened heading into summer 2026. And overall, we have seen the commercial real estate market start to kind of, it's coming. There's people that are holding on, trying to get their values. I think there's definitely some asset classes that are holding, really steady. Wall Street's apartment buying spree is still holding steady in, the apartment and multifamily space. And we're starting to see some more distress in some of those sectors, specifically in like the ones that got really overbuilt and oversupplied with units, Sunbelt states, even Florida's kind of, experiencing some pullbacks, being that rents are not necessarily keeping up with where the models and the pro formas are. And then you got insurance and, all these things that are just really headwinds working against some of these asset classes. So, and we've got, like we said, we've got $930 billion in commercial real estate debt maturing this year on the tail end of 2026. 60% of those are apartment loans. So those are, I think that's going to trigger a fresh wave of opportunity, distressed assets, sponsors, people that have been trying to figure out how do I refi, how do I raise money and figure out my capital stack. And there's just going to be, stuff that flushes through the system that happens in every cycle like this that will create buying opportunities. So we do have rising mortgage rates triggering a surge in demand for riskier adjustable rate loans. We know how that ends. So there's some interesting stuff in the housing market right now that we're paying attention to, but I wish it was as exciting and sexy as your world right now, because it's just not. Unless you are somebody that's finding, the distressed off-market type of opportunities, which again, we're seeing courthouse steps, kind of get active again. I got a lot of, investor and flipper buddies that are starting to pick up more inventory. You're seeing, more off-market sales, more cash. We did see that, I forget what the policy was from Trump that essentially prevents corporations that own over 350 homes. I think it was 350. I'll have to check my the specifics on that. But high volume holders and buyers of single family real estate from doing so in the future. So I think there's going to be some interesting opportunities maybe in this cycle as we see some more distress flush through the system, but nothing catastrophic yet. Now let's jump over to stock market, macroeconomy. A lot of factors there. As of today, S&P 500 closed right at 7,600 all-time high.
609, yeah. And that's like 90 points essentially off of my
Your call for the end of the year
in January. Yeah, we're halfway through. So again, we're 2 weeks out from the first Fed meeting. I'm anticipating we're going to get some pullback. So that doesn't mean we do anything different. It doesn't mean we don't enjoy the up days that we have right now. That's just to say that, if there is some choppiness in the near future, which I anticipate there being, great opportunities for long-term investors when they buy quality assets at a discount, especially when we were buying those assets already at those prices.
Yep.
Those prices just passed us up and we missed it.
I know.
Or again. So I would anticipate that. We're not getting a cut at the next meeting. We're going to get a pause, but we're going to get a indication of what the new Fed.
You still holding firm on July?
Holding firm on July cuts. Yep.
My man's going to fall on that sword.
I always do. For your entertainment. But I stick with my
You
gun.
stick with your guns.
I stick with my guns. And I either I die on the hill and I learn from it, or I survive and I thrive. And typically I survive.
I mean, I would welcome it. I would be shocked if they really did cut, unless
I think they need to do, again, the way that they should do it, they should do a 0.25% cut in July and indicate a 0.25% cut in December, as long as.
Yeah, I mean, I don't think a 1/4 of a cut would do anything too crazy to
It's sentiment,
right? It's more so of like a little bit of psychological, okay, I'm a little lighter now. I'm not in my butt.
Like you just said, people have been waiting for something for years. Give them something.
I mean, the last cut we got was the 50 basis point,
2 years ago. Oh, no, a year ago.
Going into Kamala's and Trump's, election month, right?
Year and a half.
So it was in November.
A little over a year and a half ago. So to me, it's funny that the futures say that we're due for a cut hike mid 2027. What? Make capital more expensive? People are already not using it. That doesn't make any sense. So again,
and that's just too far out. I mean, there's so much that can change between now and then.
I'm telling you, there's going to be a pause at the next meeting. And if things go according to plan, which they never do, but let's just hope they do, cut in July, excuse me, announced at the June meeting, or indications there'll be a cut in the near future, and then without saying when. And then cut in December. That would be appropriate. 0.5% cut for the rest of the year. It's not going to move markets too fast.
Yeah,
Gives things plenty of time to catch up.
That's the big question right now is, if they were to cut, how much liquidity and or sentiment, supercharging does that give to an already insanely, momentum driven market right now that we're seeing hit a 10-week win streak of all-time highs?
Well, it would give it to the housing market.
Yeah,
which is
needs it more than
the thing that makes me more worried about the stock market is when the housing market's not participating. They like to
which it hasn't been.
No. And mortgage-backed securities are a huge part of our economy. So when I see that, I'm like, that's not really good. Yields are high, and so that helps. But you'd rather see bonds rally, yields lower, with capital moving, the momentum on the capital being faster and moving hands faster, origination fees being higher, more loans out at a lower rate is better than a few loans out at a high rate with people defaulting. Spreads that risk. So to me, I want to see the real estate market catch up, because historically, when we look at really strong stock market runs, a lot of the times it's accompanied with good movement in the real estate market. People are making money so they can afford to lend money. Lenders are benefiting from the stock market because there's excess capital out there now, and that's being used to purchase debt, related instruments and products. So that's what's more concerning to me, although I don't see a slowdown in the market because AI is too strong of a catalyst.
Is that going to run out of gas anytime soon?
No.
Or is it still early innings?
Yeah.
I mean, it's hard for people to fathom that. I think we've talked about it 2 or 3 episodes in a row.
I didn't want to believe it as strong as it is.
Because I think we really, you and I started kind of tapping the pulse and like feeling like, ooh, this is maybe a year and a half ago.
Yeah, I mean, we've heard about it,
it's
but
been around for a while, but we had
January of this year.
We didn't really see it go, like really
clawed in, and it's like people understand AI better than crypto.
Yep.
Even though they're both this, force to be reckoned with as far as understanding. People understand AI because more people use it, and because it was when you search on Google now, it's using AI as the top result for you. It's Gemini. It's a Gemini AI result. If you click that, it then opens up, and while you're talking to it, that product is learning and getting input from you and reading your cookies and data and trying to formulate answers that are so more people they don't have to set up a wallet, they don't have to invest.
Yeah.
It's hard enough for people to buy a mutual fund.
Yeah.
I mean, crypto is like way out there. That's like asking my grandma to go from Chrysler to Ferrari. I mean, shit. I mean, that's like a huge jump.
Yeah, it is. So it's still very foreign to a lot of people.
AI is just way more. The barrier to entry was so much lower. It was like the threshold of a door versus the Great Wall of China. And so the people's access to AI has been much more profound, and the penetration in that area has been stronger, and people get it. At first it was like, it thinks for itself. Now people it doesn't think for itself. It thinks for me faster than I can. Because I just need the data points, and I don't necessarily know how to grab them, but it will understand and dissect it can kind of understand what my brain is thinking and formulate the data in front of me so I can continue thinking down that path. It's an efficiency tool, right? That's not trying to replace, minus things that don't matter, data entry and things that are like, if you're making your career on data entry, I'll give you don't have a career, you have a job. So it's replacing things that are inefficient, making them more efficient, and making people more efficient. Yeah. I mean, for example, I called in today to get contacts. I was like, I'm the AI assistant. Can you let me know what you need? Hey, I need to, get more contacts. Oh, can you confirm your birthday for me? Is this Ryan Breedwell? Yes. Oh, Well, before I send you in, just so you know, your prescription expired like 3 weeks ago. So instead of sending you to this person, I'm going to reroute you because they're already going to reroute you to this person. That way you can just talk directly to the right person. So it helped me not waste somebody's time on the phone telling me that already. That person's already doing their thing. When somebody picks up the phone and talks to me now, hey, oh, hey, Ryan, I got all your information. And it already had on my birthday. The AI gave it to it. Says that I can see right here, it says you're looking for your car. We have your contacts in stock. We do need to schedule an appointment. It says that you normally like to come in on Wednesdays. That tomorrow, can you come in at 9:40? Yes. See how fast
Oh, yeah. I mean,
and efficient that is?
yeah.
So to me, that's what AI is helping businesses do, is remove the 7 or 8 minutes that I would have spent. Can I place you on hold? Bing, bing, pushing me through. Oops, human error, pushing me to the wrong department. Oh no, it actually goes to this one. The AI doesn't make mistakes unless it doesn't understand you. But if it understands you, it don't make mistakes. Black and white.
Yeah.
And now I spent a minute and 42 seconds on the phone and thought I was getting contacts and ended with an appointment where they're going to make money and I'm getting contacts and it's about 4 times as fast. That's efficiency. Efficiency makes businesses money. That's where AI, people get that. And then you have the likes of the largest US company, NVIDIA. They're all about AI and they're talking about AI data centers. And now we need more energy and people are selling their land to these AI data centers. And so it's a more digestible product than crypto, because you still would be wrong even if you were right answering what crypto is, because that's such an umbrella.
Yeah.
It's like, which one are you talking about? Are you talking about Bitcoin? Are you talking about Ethereum? Are you talking about blockchain really and you're saying crypto? Are you talking about XRP and you're saying Ripple? I mean, that's how, until this Clarity Act fully passes as law, until there's regulation, there's going to be a long. So even earlier still in its development is crypto, even though it's been talked about longer, in my opinion. AI is a easier to understand product and tool. Look like I'm fucking sponsored by Essentia. And I'll take it if Essentia is listening and you don't mind a little bit of salt in the water. I got your salty sales right here. It's just, AI is easier to understand. And I think that when last I read, oh man, I forget who did the study, but it was like how many people use it. And even if they don't know they use it, like almost 70%.
Yeah.
Even
Oh, I can't tell you how many softwares and apps that we use.
They integrate it.
It's all in it now.
Like at the OS.
They made it so easy that, like you said, I don't even know I'm using it. I just know that my experience is way easier now. Crypto's not like that, right?
Siri even, that was everybody's first taste of AI. It was an AA though, artificial assistant. It just said, hey Siri. It took language to text and just put it in the basic search engine for you, and then would just give you the results. Now they've integrated ChatGPT in there on the light version, so Siri can do a little more. And then if it's heavy lifting, it'll prompt you, hey, can I just ask ChatGPT? Can I just put this into ChatGPT for you? Every time you hit yes, that makes the ChatGPT product better. That then gives you an answer. That's the the more people do that, the more Apple is like, yeah, we probably need to get this like integrated all the way through, which it's not done quite yet. But that's another example of it just being part of everyday usage. We don't have anything like that with crypto. Nothing. Minus Coinbase or Kraken, and we're not advocating for any of these exchanges or indexes or anything like that. We're just talking about them. They just create a space for you to buy it. But then, like, what are you buying?
Yeah.
And that's where people get really lost very quickly down the road of crypto. They don't really know what they're buying. And there's so many new projects so often. It reminds me of the 2000s and like, what internet provider you're going to use and how many of them were functional and then they just don't exist anymore.
Oh, well, I've seen too, in the world of crypto Twitter, where I like to, scroll through the amount of people that will reference using an LLM or AI with trading. And then like the next, and they're posting their stuff, right? A lot of these degens are just posting their shit, and it's the complete opposite of how it plays out. Like there's so many things, right? Where in a right space, right time, AI is, maybe not going to be as relevant. Crypto, I think, is one of those. But everywhere else, it's getting integrated into every aspect of our life. It's still a very early time in the world of AI. I mean, you even said, right, like January is when it really felt like it,
I just felt like
slapped you in the face.
Institutional. It's like I wish there was a level. It's like this has been people at MSNBC or CNBC. This is the CNBC understanding level has been reached. So pretty much basic level investors have now accepted this is a thing. They still may not fully understand it.
Yeah.
But if they're dumb enough to listen to Jim Cramer, I mean, they'll do it. And if that's that just
believe that guy's made
basic
such a
level of
career
I know.
being wrong.
He used to be right a lot.
Did he? Okay.
Yeah, he did. He did have a track record, as a lot of people do, being right. But my point being is that once it gets to like basic level of understanding, it's a thing. I mean, here's a fun one to think about. How many people listen to the show know like a parent that takes weed gummies? But like 5 years ago, that wasn't a thing. Like it was like, oh no, I don't do the weed, no weeds. And now, I'm gonna go pop a gun. Now it's more. There's just things that were taboo that just don't become taboo. There's things that become not understood. That once they're understood, people run with it, dude. I mean, absolutely run with it. Investing had its day like that during COVID because people had so much time. I think crypto benefited from that rise. And then what we're seeing now, like we were talking about earlier, the pullback in it. People are realizing, I said earlier, I think people saw their hero and realized it wasn't, he or she wasn't as heroic as they thought they were. It's like there's nothing going on with Bitcoin. I mean, zero, except Michael Saylor buying it and now he's selling it.
Hey, what's up, guys? I'm so excited to announce if you are an investor looking to generate consistent passive income, then I've got something for you. I just launched the Imagos Income Fund. It is a private investment debt fund. So instead of relying on long-term appreciation or big exit events like most real estate syndications do, we decided to keep it simple. Focus on first position asset-backed lending just like a bank, meaning your investment is backed by real collateral and structured to produce income from day one. The target return, 10% paid out annually and also paid out monthly. So no guesswork, real passive returns, true mailbox money. And because we're in the debt position, not equity, we're able to prioritize downside protection, maintain shorter durations, and stay in control of the risk, which is most important in environments like this. This is built for investors who want steady cash flow, strong capital preservation, and real asset exposure without the headaches of owning, managing, and waiting years for a payoff. So if this resonates with you, if you want to learn more, I put together a full investor presentation breaking everything down. All you got to do is just text the word income to 844-447-1555. That's income to 844-447-1555. I'll send you everything so you can see if it's a fit for your portfolio. Yeah, that's crazy. I mean, we can talk about that, I think, in a minute. But to your point, AI is here to stay. It's not. Do you think there's going to be some blow off top, catastrophic crash? You hear a lot of these older, guys that have been in multiple cycles going, there's going to be a crash. There's going to be a crash. I mean, I forget who it was another, you would know him, some well-known big hedge fund manager guy, and they all think that there's going to be some crash at some point because it's so frothy. We're hitting new all-time highs, green candles every single week.
That's what a bull market rally looks like, though. So, like, being in denial is one thing, and then being in a bull market is another. But there was a lot of people that spoke this way, in 2009, 2010, 2011, and then here, we're completely wrong through 2020. So it's essentially the way it works. I always like to be a little more contrarian than what the average maybe advisor, how they think. Because a lot of advisors don't like to think. They're more like sales people. Like they're just selling packaged investments. I actually do the shit. I just don't think my clients are going to benefit from me regurgitating what 95% of people are saying. What are they paying me for?
Yeah.
My job is to find value and drive value by doing things in a different way. And I do things a different way. I think very different than most people. I act very different in a lot of aspects of most people, and especially advisors. I'm very atypical. But that has translated into really great returns for my clients that have listened and followed that, because if it was known, everybody would do it. And that's the thing. Opportunity, and at least in my space, it's not known. You have to kind of go find it. You can get what you can get from the market, but what are we going to get better than that? How are we going to go find our 700, 800% return this year?
Yep.
That's what we're doing. That takes moving against the grain a little bit sometimes, and that can be scary. That can be calling for a rate cut when it's less than a 1% chance on futures.
Yeah.
And just looking at it and saying, looks like it's a Sunday.
Yeah.
So that's what my clients pay me to do, and that's what I do, and that's what I've made a living doing, and historically been very successful at writing that and being wrong. I've been wrong, no doubt, but a lot more right. And when I'm right,
Well, I know with what I started with you and where it's at now, you've been way more right than wrong.
Well, yeah, I mean, we always talk about it. The one thing I told Matt to sell all of his Palantir, and he was smart enough to only sell half of it, because I told him at the time I wasn't wrong based on what the setup was. It wasn't wrong. It was just fucking really wrong in 2020 hindsight. Because we bought some other stuff. Yeah, but you would.
I still have some of that.
Yeah, I know. So it's like I'm even fine being. I'm not 100% either, but you miss all the shots you don't take. You have to be brave enough to buy Palantir and hold it through that, and that's part of it. And I've done other things. Twilio finally had some pop, even though we don't own that anymore. Haven't since 2022. I got so many texts from people about Twilio. I'm like, I haven't owned that shit since 2022. But yeah, it's okay to be wrong. The most successful people are really wrong. They just don't use it as a woe is me and a fail safe. They fail forward with it and they use it to build.
100%. Now we've got. It sounds like Anthropic just filed for their IPO quietly.
Yeah, but it looks like they're gonna put their fucking office in California, dumbasses, in the area.
Interesting. So they are supposedly going to go public this year. We've got OpenAI. Are there any other big, and again, I know you're not giving any advice on, picking particular ones, but are there any ones that you like that you're paying attention to that are big names that we've heard of or maybe not heard of yet?
I mean, we just bought, some stuff that's not. We bought some space stuff recently. You should have seen it in your account.
I'm probably.
Well, I
get my emails. I just don't always check them. But.
We're what are they called? Sorry, I'm putting.
Hey.
I don't even know if I can say it, but we bought some Echo Star and some Cerebras.
There we go.
And they're those are SpaceX proxy plays.
Okay.
We're not buying SpaceX.
I was going to say, there's a lot of people that are really shitting on SpaceX.
I'm not shitting on it. I just want to buy it. You want to know what I want to do? I want to do exactly what
we talked about last week.
You did with your Palantir, except I want to buy it when I told you to sell it. So I want to let people run it into the floor.
Yeah.
I think it should be. I think if we get into it, it's going to be at the $300-ish zone. And that would be like a 70+% pullback off of what it's going to pop at.
Which is not uncommon after IPOs.
And so it's
especially ones that are overinflated at $2 trillion or 1.7 or whatever it is right now.
Yeah, and I don't necessarily think that's overinflated.
I know, that's true.
But here's what I do think. I think that valuation is very forward thinking, and there's nothing to justify it yet. So I think a lot of people are going to see the financials and be like, holy lip a dip.
Yeah.
Not as great. They'll start selling it. It's going to be extremely high volatility. We decided as a group we're not
Just going to stay away from it for a while.
for a while.
Yeah.
We'll have ETFs that'll own it, and we'll have proxy plays on it, like MicroStrategy is to Bitcoin in a sense. But it's going to be really volatile. So I'm not advising people on it to buy it. I'm not advising people to avoid it. I think it's going to be a huge company.
Oh, for sure.
You just have to remember, like,
anything Elon touches, is going to, the probabilities of it failing versus succeeding, the latter is more likely than the former.
Yeah, I'm just a fiduciary at the end of the day, and we have regulations by the SEC, and like they have volatility measures in accounts that they think that when it gets to a certain level, you're not acting in the client's best interest.
Yeah.
Even if the client wants that, you can't do it for them. You have to not do that. So again, somebody's going to go to the casino 7 times this week, and that's their prerogative.
Mm-hmm.
If you're catching what I'm saying, people have a right to risk what they want to risk. We think that there's a smarter time to take a bite off that and not have to ride the front end of it.
Now, what are your thoughts on? Have you heard anything about this kid? He was an ex-OpenAI researcher. His name's Leopold Aschenbrenner. He's 24 years old.
Mm-mm.
He got $225 million in his first fund at 24 years old, and he's run it up to $5.5 billion. And a lot of people have been following him, and I don't understand the whole disclosure thing. Like, you release your disclosures on if you have a big fund, right, where you're kind of placing those holdings. A lot of his stuff is around energy. You've talked about energy specifically on, obviously, its impact and tie to AI, right? We know that, for a lot of reasons, energy, but obviously with AI now being front and center, with what's driving a lot of this growth right now and going to continue to drive the growth, we know that energy is going to be a critical component of it continuing to have the foundation it needs to scale and do what it's going to do, right?
Correct.
So this guy is he's very bullish on energy stuff. What are your thoughts on energy? And is there anything that you're paying attention to in the energy world that you think is, important to keep an eye on, or just are there any headwinds in that area? You think that there's, some undervalued opportunity there? Like, what's your thought on the energy side of the stock market sector?
Yeah, I mean, one of our biggest stock plays for the past 12 months has been an energy stock. I think we're up like 800 or 900% on it for some people. And the demand for energy is only going to continue to compound and grow. So I think that really where the opportunity lies is the type of energy and the delivering of it. And so, a lot of these data centers are very hot. So they're going to be in areas that are cooler. They're going to be in areas with a lot of natural water. They're going to be in areas that maybe have consistent, like a very big thermofrost barrier. So the ground is very cold, more cold than it normally is. Then you get into talking about how we're delivering the power. Well, solar is number 2, really, and the cheapest, but the most efficient, but the most expensive is nuclear.
Yeah.
So then you're going to have, another boom in that. I think there's going to be another big solar kind of boom, commercial solar fields.
Okay.
And the thing that's nice about commercial solar fields is they want and need to be in the opposite areas that the data center needs to be. So how are we going to deliver that power? It's a very, very, very interesting conundrum. And we don't really have an infrastructure up to date for that, nor do we have an answer for it currently. So there's a lot of opportunity because of that. So demand is a lot, and we do not have the infrastructure right now to meet the demand if it was at capacity, which thank goodness it's not. So we'll need to develop an infrastructure, technology. I think it's going to go mainly solar, and then efficiency on panels is going to improve, and delivery is going to improve, and there's going to be some battery technology that's going to improve. But nuclear is really hard because, you have all the meltdowns that happen on the East Coast. You have California's bureaucracy where they're shutting down nuclear power plants, not building them. You have the Chernobyl idea in people's heads. And so that's a hard one to get around for a lot of people. And then, we see like in when there's geopolitical risk, which we don't have in the United States, but like in Europe, they're frequently targeted in geopolitical risk, which causes instability for huge regions of people. So again, it's this real crazy balancing act that people have to figure out. But that's where I see because we don't have an answer, because I can't give you an answer, there's opportunity.
Yeah.
And so that's where I see the opportunity. Anybody who delivers, creates, makes, stores energy, they should have an opportunity to do very well in the coming years, because we have a substantial demand on the horizon that needs to be met. And somebody's going to figure it out. Whoever that somebody is going to.
Do you think they'll figure it out in time for that absorption need to be there for the AI companies, or the AI companies and the investments that are being made in them being front run, assuming that that's going to keep up with it, but there may not be that solution there quite yet? What if that doesn't kind of converge if and when it's needed?
If the latter happens, that's the risk where we say we need to get ahead of it, because then it will go overseas.
Yeah.
It'll go to the likes of China, Russia, places that will do anything just to nibble off a percentage of control of the market.
Yeah, for sure. Okay, so let's talk about overseas. Obviously, we've heard there's a deal, not a deal. We've got Iran peace talks supposedly as of today saying that they're not talking anymore. Trump saying they're talking. It's almost like anything Trump says, they say the opposite. Anytime there's a peace deal and they're quote unquote close, then it's called off for. So, and we've, been thinking that this conflict is going to get wrapped up here in the, we said this, I think, couple months ago. We thought it was just going to be a couple weeks, right? Markets continue to shrug it off. Oil has jumped a little bit again. Where's it at today? Do you know?
It's at 91. Let me double check.
Still sub 100?
Yeah. Well, well under 100. 93.
Today Marco Rubio, I think, was in front of Congress and said, "Hey, the war is over." To your point, we've slowly started to remove kind of assets and, pieces of our military out of the Middle East, but there's still some, jabbing going on of some bombings here, some this and that. Is this conflict going to get wrapped up? And if there's any escalation that it doesn't, or if there's any escalation and it doesn't get wrapped up, could that be one of the catalysts for a big pullback in the coming months?
I definitely think that, it's not going to really escalate more than it has, which is, strategical airstrikes. And I think they're done via like missiles, or in a way that's not really a high risk to the United States. Really just to keep them at the negotiation table and make them make a deal they don't want to make. So if it wasn't Iran and it was a country that actually had the opportunity to have a leg to stand on, then I would say, yeah, this could be a potential problem. And I'm not saying that there couldn't be volatility in the stock market. Obviously there could, but the market probably would have already shown that. And it looks like it's not. It's more focused on AI and investment data. And Iran just is not really that important. I mean, they're not important to the world. Like if Iran didn't exist, the world would just continue rolling. You can't say that about China or the United States or Russia to a degree, or certain countries in the EU like France or Germany. That just doesn't work. But Iran's really, they're not a major contributor to the world economic stage. They don't participate positively in much of anything. They're a state sponsor of terrorism. So you really don't have like much at stake for them being effective. And really, I mean, it's I don't even know how I'm surprised that we haven't done more. Like me,
Yeah, we've done a lot of negotiating with them.
yeah. Like
When really, I mean, they're kind of
I would just say forget this. Like if
they're jerking Trump around a little bit.
yeah.
Right?
So to me, I would just say, hey, I'm gonna let you know, like we're gonna need to come up with a deal on Friday, or I'm going to like flatten you guys out. Like if you guys thought you were flat, you're vertical compared to how horizontal you're about to be. So I'm just warning you because you're obviously not playing.
They don't want to play ball. I mean,
Yeah.
every time there's some quote unquote agreement on the table, and it seems like there's the 10-point plan, and there's the this, and this talking. It just something that is a total like. Of course, we can't agree to that. They just throw it on the table, right? So
The last country that did that was Japan.
yes,
That's all I'll say.
which is
And then we
right?
we tried to tell them, yo, you got to we'll never
They have
surrender.
nuclear capacity.
No,
You don't.
they
think so
never
at all?
did. No, they never did. They said enriched uranium. They could build like 9. They could have built, I think, like 7 to 9. But no, they don't. They don't. And nobody cares about them.
Yeah,
They have no
the world stage.
yeah, they have no major regional allies that care about them.
Here's the thing about most investors right now. They're consuming a ton of content, but they're not actually more informed. They're reading all the headlines, they're watching the tickers, they're following all the noise that mainstream media wants you to follow. And at the end of the day, you're still not informed on what it actually means for your deals, for your portfolio, or for your next move. So if you're listening to this right now, I don't think that's you. I think that you actually want to understand what's happening, how it impacts your investments, what you should be doing going forward, what you shouldn't be, and not just reading about it. That's why I decided to build the Wealth Intelligence Brief, a newsletter sent to you 3 times a week directly to your inbox where we cut through the noise. We send you the macro data, the real estate intel, crypto signals, and all the unfiltered takes in 5 minutes or less for free. Eliminate the noise, keep the edge. Sign up by texting the word WIB to 844-447-1555. That's WIB to 844-447-1555.
My opinion is if it get stock market aside, which it would probably not like it a ton, you just start saying, hey man, we're gonna start just we're gonna start unfortunately going for your civilians. And so then it'll force the people to overthrow the government. If you guys don't want to change, if the people's elected leaders wanna, well, we need to take the people out then. It's sad to say, that's the worst part about conflicts. But when you have a people like Iran who are just pretty shitty, if you ask me, I'm not a big fan of Iran.
I don't disagree with you.
And they don't like us, so hey, we're reciprocating that.
Yep.
I don't feel bad for them. I feel bad for innocent lives lost. But this was the point we got to when we were in like World War II. We're like, hey, Japan, you've lost. Okay, we need to end. They didn't want to. They absolutely didn't want to. It's a fun fact. You should go look at some of the holdouts, like until the 70s. They had people on islands fighting, Japanese soldiers still fighting till the 70s. They literally thought the war was still going on. I mean, it's a fact. You can look it up. I think the last guy surrendered in 76. So it's like that was the mentality. And that's the type of mentality.
Yeah, in Iran too.
And so the only way to break that is by actually breaking it. And it's, I'm not saying to nuke them. Although,
What are you saying?
Don't push too hard. It's a wet paper bag.
Yeah.
Start blowing. I mean, start with major cities outside the capital, and then you blow up the capital. And that's what we did. We started. It's Hiroshima. Now we are on our way to Tokyo. If you guys really want to do that, fine. And we were taking out cultural centers. I mean, we're taking out historical land. This is what we have to do to get it done, then that's what we have to do to get it done. It's, I don't want it to be that, but like, we can't. I
just opposite of like any end to this conflict right now. Like,
they have to end it.
That's what I'm saying. I don't think they're going to do it. I think they're so stubborn and they want to posture.
Well, then we'll do it for them.
And that's what I'm curious to see if and when we get there, which I hope we don't, but it seems like we're getting closer and closer. Like, I don't know how much more Trump, and he says, like, I've got all the time in the world. But does he, right? Like, how...
Well, he has his length of his administration to send.
Right. So how much time is he really willing to give them to come to the table and, agree to reasonable talking points? I mean, there's going to have to be some give on our side in some capacity, and it'll be palatable for us, right? But I don't see this ending in some agreeable, like, oh yeah, we're gonna... I hope I'm wrong. I really do. I hope I'm wrong, and I hope that we find a way to actually get good leadership in Iran, and maybe they can be a part of some cohesive, collaborative, whatever that looks like in the Middle East, and the world stage would recognize them in a different capacity than they've ever been recognized before. Like, I think that would be a phenomenal outcome for the whole world. And that's what I actually do think Trump is trying to push towards. But he's not given really any of the opportunities to make that happen with the way they're responding. So it's almost going to kind of like force his hand, and I wonder about the blowback of that. So
I think people eventually would just digest it like they did.
Because I wasn't around when they dropped a nuke, but I can imagine like that had to have been fucking shocking, right? To think about just dropping a nuke and just murdering a whole society of people because of some dumb fucks in leadership.
Yeah, it's not a highlight.
Yeah.
It's not a highlight, but I'm just saying, like, we have got to. I can remember one time in modern recent history that time has been achieved between two powers that were at odds with each other. One had clearly won. We had won the war. We were trying to negotiate a surrender, and the Japanese generals, military, they would not do it. I think the language was something like they were literally going to blockade themselves off on that island forever until they could just rebuild, and then they were going to come and attack America again. They were like, we'll just wait until we get big enough, we'll come and attack you again. That's essentially what Iran is saying. So, like, I already know how that ends. We have a playbook, much more developed. I would argue that the Japanese army in the 50s probably would have held to the 2026 Iranian military. They're so pathetic. Technology wise, they have some tech, but I mean, just like, we're talking like...
I mean, they're not Pakistan, but...
No, I just didn't like... They're just so pathetic.
Yeah.
I mean, anyway, it's going to... They just have to bend the knee. And the problem is, too, and I'll give them this, they're going to have to bend the knee to probably the biggest person they don't want to ever.
Yeah.
But it's going to have to happen. And all they're going to have to decide is, do we want to cease to kind of exist in the way that we do now? Because it completely rocked Japan. Like, it changed their trajectory of how they are as a people forever.
Society, yeah.
Or do we want to just play by the rules and say, yeah, we lost, we're done?
Well, they've already said they're willing to make them and their cause and everybody associated with it martyrs.
Well,
So, and
we'll
that's
help. We will
one of
help
the
them
reasons
out.
why I just...
You're only a martyr when
anybody
there's
that-
people to appreciate your fact that you martyred yourself. Eventually, there's just not going to be any of that.
Well, there's, and we won't get off on we'll wrap it up on this, but there's the whole Israel tangent, that's a whole different dynamic.
Yeah, that's not our problem, and it is at the same time.
Yeah, and there is a lot of evidence that shows that they're kind of working against Trump in certain ways, where he's trying to, calm some shit down and get things, negotiated, and then they're off, kind of running their own, I think, agenda in certain capacities. So that's a whole nother kind of wild card in this situation that makes it a little bit more challenging. But either way, conflict in the Middle East still creates volatility in the markets. Markets overall have done a great job of absorbing it.
Mm-hmm.
One market that has not done a good job absorbing anything is the crypto market. So we've seen some pretty major pullbacks. I think we're looking at like 16-ish lowish.
Yeah, it's
down on Bitcoin over the last, call it 10 days. Bitcoin ETFs bled 1.67 billion in outflows last week. Third consecutive week negative. Cumulative 3-week exit hits 4.21 billion, which is the largest single week Bitcoin fund outflow of 2026. So we've got a lot of selling going on and not a lot of buying, absorbing, that supply. So we've seen Bitcoin really drop. We've seen really the overall, market cap in crypto pull back significantly. I think Bitcoin is sitting at, I think it was sub six. No, I was going to say it's sub 60, I think 8 is the last I checked, 67, 68, something like that.
Yeah, it is. It's sitting at 67,796 right now, down about 5% today.
Last weekend it was at 82, something like that. So
yeah, it was.
That's the challenges with crypto, right? Is just the volatility, and most people can't stomach that. I mean, and most people can't stomach something like that, doing that they don't actually fully understand or feel comfortable with. Going to the Clarity Act, right? Of like why that is so important. Now, the Clarity Act, some positive news there, enters a 4-week window to advance before Congress July recess. So this is actually a little window of time that they can move this forward. They had the passage through the Senate. Now they have the ability to put it through in front of Congress, which could potentially lead it to Trump's desk by the end of this year, if we're lucky. Whether or not that happens, I don't know.
I don't know either. I don't know why there's so much pushback on the regulatory framework for that.
Did you see Jamie Dimon's interview with, I forget, it was like Squawk.
Oh yeah, he was calling Brian Armstrong.
So Brian Armstrong,
full of shit.
The CEO of Coinbase, basically being like, why are we, the banking cartels, right? The banking and central bank, banking industry. Why are we negotiating with this crypto guy? He's full of shit. And because obviously Brian Armstrong has kind of been we'll call it the liaison of the bill for the crypto community or the crypto world, being that Coinbase is obviously one of those kind of category kings in the exchanges, and a lot of policy that has been enacted and created. Coinbase has been a proponent of helping push a lot of those things forward. And I mean, he was going in on him in this interview, and just in general, he was going, yeah, we're going to fight it, right? I mean,
he said they're fighting it and losing, but they're still going to fight it.
They're going to fight it. And it is interesting because at the end of the day, the good old banking cartel does not want there to be a competitor that they have to figure out how to play in the sandbox with, right?
Yeah, I mean, that was my original argument. So they're going to find out that they can't replace it, or not replace it, get rid of it, and they're just going to make their own version of it.
Yeah. Yep. Yeah, so I just thought that was interesting that he was. Now, to your point, also another thing that kind of created some fear, we've got Bitcoin or just crypto fear and greed index is at 23, extreme fear again. We had 10,300 Bitcoin moved from Mt. Gox wallets, which is some big market exchange that ultimately got hacked. They moved anytime you see big stuff like that, right, people worry about significant amounts of supply hitting the market that don't get absorbed, and then obviously price pulls back. And that's essentially what we saw with ETFs the last couple weeks. And then I think the big thing that was concerning to a lot of people, even though it was a small amount, Michael Saylor and Strategy, who I forget, somebody retweeted one of his things, was like, sell your kidney before you sell a Bitcoin. And this was like 3 or 4 years ago. And then like another tweet that was like, we'll never sell our Bitcoin. Never, right? And now he's selling some Bitcoin. You even said that he was probably going to do this and that it was going to be a big deal and concerning to a lot of people.
Yeah. He's like the last catalyst in the Bitcoin market. There's Rick, because the only thing that's been keeping Bitcoin going is him.
Well, he's kind of like the key man risk for Bitcoin, right, as an asset.
Well, if you remove the MicroStrategy purchases over the past couple of years, Bitcoin price would have been trading around where it's at right now.
Yeah. Yep.
So like all of the earnings, the triple digit break, none of that would happen.
Well, there's a lot of stuff that could be catalysts that unravel the crypto market, with Bitcoin being somewhat of the lead domino. Should there be more, we'll call it, exits of Bitcoin holdings and holders going forward? A lot of people still think this is just a healthy pullback, and that it's going to create a new base for new all-time highs. I don't know. What do you say?
I'm not so sure. I think that what'll happen is when the money comes back into crypto, it's not going to go back into Bitcoin if it came from there. I think people are going to start buying other things.
Well, to your point, right? I mean, when it was kind of the category king and there wasn't as many options or understanding or utility in a lot of things, it kind of just was the thing that everybody initially gravitated towards. The white paper and the thesis made a lot of sense to people that were anti-central bank and, the Federal Reserve and all this kind of stuff. There's been a lot of evolution in the crypto markets over the last, decade. And it's continuing. And then with more, institutional attention, more policy coming into the place that is going to, I think create a little bit more laws and regulation. I think it's well, and then you got quantum. So that's another concern, right?
Mm-hmm.
So there's a lot of things working against Bitcoin right now. I still think it's here to stay. I don't think it's going anywhere. I don't think it's going to zero, but crazier things have happened.
Mm-hmm. Hopefully you kept some of your short.
I did. Yeah. Little,
not all of it.
Little swing.
Yeah,
No, I took TP'd on the way down a little bit. There we go. I'm actually sitting on the sidelines a little bit right now. So I'm glad I am. So overall, lots going on. And we love talking about it with you guys. So thank you so much for tuning in. As always, if you want to connect with Ryan and his team, X-Ray, text the word X-Ray to 844-447-1555. If you are a passive investor and you are looking to be the bank with us and you want to get in the Imagos Income Fund, 10% annualized return, fixed income, paid monthly, text the word income to 844-447-1555. Been super awesome connecting with many of you who have come into the fund that we connected through this podcast. So pretty awesome. We are honored to build the relationship, earn your trust. I know Ryan feels the same way. So many people through the podcast over the years that we've become friends with. We've gone to Napa with. We've done investments. So we've done all kinds of cool stuff. So that's the power of having a good community. If you feel aligned with anything that we're doing, if there's anything we can be of value of to you, whether it's now or in the future, don't forget to reach out. 844-447-1555. As always, keep investing in yourself and your wealth on your march to $1 million and beyond. We'll see you guys in next week's episode.
Cheers, y'all.